So my role has been really unusual in that I've been an academic and I've actually left Berkeley recently. I'm sort of transitioning out. Got an offer to go into industry a couple of months ago. So I'm actually now working for a company called NextGen Crowdfunding, which is not a crowdfunding portal, just to be clear. We are a purpose or mission-driven company trying to support portals and issuers, and I'll explain a little bit about what that means later, but we're basically here to inject some energy and marketing and excitement into the industry. So I'm going to start with my academic hat for a minute, though. The industry is, of course, highly regulated and is part of the broader discussion over early-stage access to capital. And let me tell you some of the discussions I've had in Washington, D.C. My phone rings a lot from people in Washington, D.C. because they believe I have the data. And despite the political rhetoric, some people in D.C. actually care about the facts, and they are actually trying to make decisions based on analysis of existing data sets. Not all, but some do. And so I talked to the National Economics Council, White House, Treasury, blah, blah, blah. All the agencies ask me what's happening. And so let me give you some feedback from what the people in Washington, D.C. are thinking. First of all, the SEC actually sort of likes crowdfunding now. They've gone from being really hostile to wanting it to work. And that's really good news. And actually, I met Doug at the very first meeting with the Securities and Exchange Commission, where he literally pulled me off the big table and said, no, you sit back here. The rooms have status and you don't have status. And I didn't understand how Washington, D.C. operates. So he's my guru. But my experience has been, let me just report a few conversations. The National Economics Council wants to know why Title II is not working better. They are really surprised that Title II has not taken off and had a larger and broader impact than it currently has. And the feedback loop is going from the National Economics Council to certain people in the Senate about making some changes, so there will be some flavor of a Jobs Act 2.0 dropping at some hypothetical future point once we have a non-Donald Trump presidency, I hope to God, next year. But nothing at all will happen in 2016 that's substantive or meaningful in any sense of the word in Washington, D.C. Just to set expectations, this is a dead year for progress. So 2017, we may see actual movement. Some bills might drop this year, but I don't think anything is going to get done in the near term. So the discussion is what needs to happen on a regulatory and policy framework to make equity crowdfunding work better. That's a much better discussion than 3 years ago when it was, this is all a bunch of charlatanism and fraudsters and crooks, and this is going to be a disaster for the economy, and grandmothers are going to have all their life savings taken away from them. And the rhetoric was informed by AARP and Barbara Roper and others that literally had this exaggerated sense of concern about risk. And as Doug reported, there's now some calmness in Washington, D.C., and they want it to work better. I had a meeting with NASA, the National Association of State Securities Administrators, a little while ago, and they said, by the way, just as they think of crowdfunding, Title IV isn't crowdfunding. In their world, crowdfunding is Title III. Title IV has nothing to do with crowdfunding, and they don't understand why we even talk about it, because in their world, it's sophisticated investors that are going to get involved in the financing of really innovative companies, like a panel you hear about soon, and they don't even think of it. So the state securities regulators are not concerned about Title IV hardly at all. Title III, they think there's enough safeguards in place, they feel comfortable with the framework that's in place. So a few other questions. Why don't we see more minority and women business owners using equity crowdfunding? That question is being asked substantially. There is good data, by the way. Data point one, women 13% more likely than men to succeed in an equity crowdfunding raise. However, you set lower expectations, so your amount of money is still low. But there is data, and we have Barbara is here. Oh, Nancy, sorry, Nancy. Where are you, Nancy? There we go. Anyone wants to look at women in equity crowdfunding, get to know Nancy, former dean of the business school at San Francisco State. Is that right? Yeah. Got it right. Okay. But super expert in women access to capital, angel investor. So if you care about women entrepreneurship or you are a woman entrepreneur, get to know Nancy before you leave. I love her. So secondly, the Small Business Administration funded some research. I had a little tiny part to play in that, talking about the lack of awareness of crowdfunding in minority communities. So why isn't there more? And I won't bore you with the details, but the bottom line is there literally just isn't information in those communities. It's not a matter of racism. It's not that people behave in a racist or ethnically biased way on platforms. Basically just a lot of those communities are very insular and tight networks of information flows, and no one in those communities has done it, and they don't have peer reference, and there's not a lot of information exchange. So one thing as an industry that we need to do is get out of the tech world and the WeWork accelerators and get into other networks and other communities that we care about. Because unfortunately, this is becoming a very Anglo-Saxon/Asian community, and we're not seeing a lot of Hispanic or African American or other communities involved in crowdfunding. And I think we need to intentionally do some outreach to bring more entrepreneurship inside the tent. So let's see. Interesting conversations have been occurring at the foundation level. Rockefeller, Gates, MacArthur. A lot of the foundations have taken interest in crowdfunding, and I'll show you a slide later. But it's being taken seriously by major NGOs and major foundations as a way of mobilizing resources internationally, not much domestically. But internationally, there's a lot more interest than we're seeing here. So I promised you some data. So will equity crowdfunding accelerate in 2016? That's the question we all have. My answer is this probably should be a moped, not a Ducati. But it's a much better looking slide. I don't think it's going to accelerate dramatically quickly. And I'm basing that on a lot of data from a lot of other countries. For those of you that don't know, not invented here, invented in Australia 14 years ago, in Europe for multiple years, and in the UK for multiple years. The US is a laggard, not a leader in equity crowdfunding. So we have a lot of data from other countries. Retail demand. Joe the plumber, your Aunt Edna, your neighbor who runs a catering company, they are not actively seeking investment opportunities into equity crowdfunding. They don't know that it exists. They don't know that they can diversify. If they're smart, they're putting some money into retirement, although 30 to 40% of Americans don't have any retirement savings, by the way. But those that do, they put in 10% of your income in the 401k, and they're not diversifying. So when we think about this as a new asset class or diversification opportunity, they look at you like you're speaking, Klingon. They have no idea what you're talking about. Whoops, wrong direction. Sorry about that. So this is an interesting slide. So we did some research. We being NextGen Crowdfunding. We have some resources. So this is a sample of 15,000 Americans. The sample pool is over 1,000 respondents. Very good geographical, race, gender distribution. So those of you that are into survey research, the data is very reliable. So what this represents is a number of people that have actually done crowdfunding and contributed to a crowdfunding campaign as a percentage of the over 1,000 valid responses that we got. The black bar is they've contributed at least once to a company through crowdfunding. Now, we use the word contributed because in their minds, the distinction between Indiegogo and Rocket Hub and the multiple platforms is really fuzzy and people don't understand the difference. This is participation in broader crowdfunding as they understand the market to exist. The red is done twice, the silver is 3 or more times. So that's almost 80% of our sample pool had actually engaged in crowdfunding. How many times have you visited a crowdfunding site in the last month? I was shocked by the numbers. 59% of Americans surveyed in this random sample claims they have at least been on a crowdfunding site. It may be through Facebook. They had a friend who did something. When they took a look at it, it doesn't actually say that they contributed or invested, but we at least have pretty broad engagement, and 5% of people had weekly visits to crowdfunding sites. Pretty interesting. So this is, I should have keyed this better, 43% of Americans actually knew that there were ways of investing in companies outside the broad stock markets. They don't have the nuances, the details, but they knew about these things that were out there. So if almost 40% of Americans know there's alternative investments, that's a good indication for the equity crowdfunding industry. This is, are you aware of these terms? And we don't check their knowledge to see if they actually know what they're talking about, but they self-reported awareness or having heard these terms before. Obviously, the red is don't know, the black is do know. But you look at it, basically 25% of people have heard of investing through crowdfunding. 23% have heard of the Jobs Act. It really surprises me. They may be thinking of something else, but they claim to know what the Jobs Act is. And there's been a lot of Jobs Acts, by the way, in Congress. Then you have equity crowdfunding, about the same numbers, high 20s. Title II, we specifically went for the longer one that's been around for longer. I think that's 18% if my natives. Then we look at Reg A, and Reg A was about 7%. You get so surprised that 7% of Americans have heard of Reg A or Reg A+. I was actually shocked by the data. So sentiment analysis, we actually asked a lot of questions to determine what you think about companies that would engage in crowdfunding. We asked the question in a number of different ways to gauge them. So the Q10 here is, what if we told you there was a company that could raise money and they might be raising up to $10 million through an online platform? Would you be interested in investing? 45% basically said hell no. That's the non-academic definition of that sample. 22% said maybe, and 33% said, yeah, I'd be interested in talking to them. So again, thinking of a company raising a lot of money, negative to mixed sentiment, right? What happens if you say, what if you could invest in a company for as little as $300? Would you be interested in participating in an early wage capital raised by a company using an online platform if you could get in for just a few $100s? All of a sudden, 16% said absolutely not, 71% I'd love to find out more, and 13% were on the fence. Same question, just phrased differently. So by looking at the amount of personal contribution, not the amount of the capital raised, the sentiment basically flips to being more engaged. Gender, 49% female, 51% male, so it is a pretty representative sample. And then we looked at income distribution. For those of you who wanted to know, this is basically middle-class Americans. So that's in thousands. Most of the people were between $75,000 and $150,000 income. This is not a wealthy sample pool. This is a middle America retail investor sample pool. We intentionally biased against high net worth individuals in our sample. So some of the challenges, despite widespread awareness of crowdfunding and self-reported awareness of equity crowdfunding, they really don't know much. I haven't gone into all the data. We'll be releasing the survey soon. But the actual specifics, risks, complications, methods, models, they don't have a clue what we're talking about. They have just heard that there's this thing that's new, that's out there that might be interesting. So as an industry, we have a lot of education that we have to do to bring people up. The first significant fraud is causing a little bit of concern amongst some of the compliance officers at some of the IRA groups in town. But again, it's not a really big fraud. It was caught quickly. It was relatively small. 82% of the money, was that right, Doug? 82% of the money was recaptured by the securities regulators. So the good news is the regulators did their job, the market worked, the fraud was detected, the criminals are in jail, and most investors got their money back. That's not a bad outcome. There's always going to be a few bad actors. So for me, it's actually a positive indicator that the system worked as designed to protect people, as opposed to the fact that somebody tried to game the system. So this is my best slide. I was at a meeting with Bill Gates in Washington, D.C., and there's this group called CGAP, which most people don't know. It's a consultative group to assist the poor. It's basically a working group of all these organizations. So basically everybody who cares about making a difference internationally collected together. So the director of CGAP comes up to me and he says, I hear you know about crowdfunding. I'm like, yeah, a little bit. He says, that's great. 2016 is the International Year of Crowdfunding. Like, what does that mean? He says, IFC, the World Bank, Bill Gates, all these organizations have dedicated resources and staff to studying how to use crowdfunding to make global impact. All those groups are involved in Study Forward Foundation, Bill Gates Foundation. Look at the list. It's a pretty amazing group. So the interesting thing is that while we're so focused as an industry on, and nothing against Title II or Title III or Title IV or Title VII, which no one talks about, which is minority access, which needs to be talked about more, there's a huge international group of experts and academics and policymakers that are studying crowdfunding, trying to figure out how to make a real difference for the poor, the disenfranchised, move the needle internationally. So being an academic, that's where a lot of my interest lies. But just to let you know, this is actually at that level of focus. The World Bank, IFC, Bill Gates, Ford, Rockefeller, that's being done. I'm actually working with the Rockefeller Foundation on one project right now in Africa around crowdfunding. So the good news is the model has been proven to work, and they're now trying to figure out how to scale and apply the model to solving more intractable problems. So they're 6 to 10 years ahead of us than we are in the US. So the good news is I think you'll start seeing more and more activity and more interest in applying crowdfunding for truly democratizing access to capital, which is a phrase we banter around a lot but don't do a ton with. So time for a blatant plug, following Doug's lead here. Thank you, Doug. So what is NextGen crowdfunding? I get asked that a lot. NextGen crowdfunding is founded by a very high net worth individual who absolutely believes that we need to restore the connection between consumers, customers, and business owners. He believes that crowdfunding is an important way to restore some economic vitality to Main Street and small businesses. And we are going to do a series of activities and events and initiatives, some of which I can talk about, some of which I can't talk about yet, to really try to throw some energy into the market. So one of the first things we're doing, which we have started talking about, is what we're calling ignition events. The first one we're doing is at South by Southwest in Austin next month, and we are going to be showcasing 6 highly innovative companies that are in the midst of testing the waters or a live Reg A Plus offering. We're going to be doing that with 10 to 20,000 online viewers. We're going to have hundreds of people in an event. We're going to have live streaming, and we're going to have possible cable distribution of the event. Our founder also owns a TV station and studio, so we have TV cameras. So we're going to literally shine a gigantic glaring spotlight on some of these companies and help them showcase their raise, and we're going to track their progress. And then we're going to do similar events, other locations, other segments, other industry verticals. There will be more, is the bottom line. Why are we doing that? Because we think that one of the key things that we can do as a company, we're a purpose-driven company. If anyone of you, are you trying to figure out how we're going to make money, just know for now we're a purpose-driven company, okay? Is that we are going to put a lot of energy and excitement behind the opportunities of equity crowdfunding to really make a difference. So the good news is we'll be doing that. Now the second thing is I negotiated with him. I said, in my core, I'm a geek. Sorry, I have to admit that I'm in Silicon Valley. I truly am a geek. And I love data, and I love analysis, and there really hasn't been a lot of interesting things going on. So I just got permission to announce a couple of things. First of all, I'm going to start doing a monthly masterclass webinar. So for those of you that are industry experts, this is going to be like what we debate over dinner. These are going to be really high-level discussions. How can a university leverage crowdfunding for tech transfer here? How do we really mobilize Golden Seeds and ASTIA and other organizations to make more impact in women issues? It's not going to be what's Reg A, what's Title II, what's Title IV. It's going to be sort of the really high-level discussion. Deconstructing very successful campaigns, bringing in top-level experts, looking at why things are successful, looking at policies. Once a month, I get to go play. So that'll be my playground once a month. We're also going to be doing a large number of educational events, soon to be announced, but mostly webinars. And I think the key is rather than doing physical events, we think that the industry really needs more distributed information more broadly. So rather than doing another conference, and I love this conference, and I love Sydney, and I love his passion for making a difference, but our company's not going to do a lot of events. We're going to do a lot of web-based distribution of content so that you can have access to it and share it. And so far, everything we're doing is for free, or close enough to free. So we're really trying to move a needle. So my request to the industry is the following. I'm talking to the 50 industry insiders and the other speakers here in this discussion. What does the industry need in the next year to really help mobilize growth? How do we turn it into a Ducati instead of a moped? If you have ideas, please come talk to me. So with that, I will turn it over. You have some great panels, and the nice thing is you actually get to see some success stories and learn from some of the experts, and I'm very excited to actually sit in the audience and learn. I do have to run over to Stanford University and be an academic later this afternoon, so I'll be gone for a couple of hours, but I'll be back this evening. If any of you have questions, happy to talk. Thank you so much, Sydney.